Hey everyone! It's time for our favorite segment again. Today, Joy is here to give you an update on the super hot US stock market. The major indices, like the S&P 500 and the Nasdaq, have hit new all-time highs. We're going to dive into what's driving the market and, most importantly, the good news about inflation that might actually lead the Fed to cut interest rates. Plus, I've got a ton of interesting stock news to share with you all. Let's get to it. Joy Up Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. All right, everyone, it's a great start to the show, isn't it? The U.S. stock market was buzzing last Tuesday, especially the S&P 500 and the Nasdaq, which both hit new record highs. The good news is that the inflation data came in softer than expected. This has brought a fresh wave of optimism to the market, as most investors are now hopeful that the Fed, or the U.S. Central Bank, might start cutting interest rates as early as next month. But before we get too excited, let's take a quick look at the numbers. The Consumer Price Index, CPI, for July only increased by 0.2%, which is the same as June and slightly below what economists had predicted. Even though core inflation, excluding food and energy, was a bit higher than expected, it's still considered a positive sign overall. As an analyst from ING mentioned, overall inflation is in line with expectations, and that gives the Fed some room to consider lowering interest rates. Now, let's talk about some interesting individual stocks. Joy has picked out a few for you. Let's start with a company that's really taking off, ASTS Space Mobile. This stock soared by 13%. Why the huge jump? Well, the company just announced an updated schedule for launching its new Bluebird satellites, which aim to provide high-speed internet to smartphones from space. Joy thinks this is one to watch, as this technology has big-name partners like Vodafone, AT&T, and even Google. But it's not all good news, of course. Here's a piece of news to be cautious about. CRWV. The company just reported its Q2 earnings, and the stock dropped by 6%. The main reason is that their operating expenses were much higher than expected, leading to a loss that was more than double what Wall Street predicted. Even though revenue was good, the high costs are a key issue for investors to keep an eye on. Next, let's look at a stock we all know well, SBUX, SBUX. We have some good news from Baird analysts who upgraded their rating from neutral to buy with a new price target of $115. They have high confidence in the company's recovery strategy under its new leadership. So, if you're a coffee lover, this might be a stock to watch. Another interesting stock is United Airlines, UAL. S&P Global Ratings just upgraded the airline's credit rating, reflecting the company's strong performance and stable cash flow. Even with the challenging travel market, this stock is still appealing because its main revenue streams come from premium services and international routes, which have good profit margins. Finally, Joy has to mention a stock that's creating a lot of buzz, Micron Technology, MU. Analysts from JP Morgan have given it an overweight rating and have even increased their price target. The reason? The company's earnings came in better than expected, especially with the rising prices of DRAM chips used in AI and data centers, which is boosting their profits. If you're interested in AI-related tech stocks, you shouldn't miss this one. Beyond individual stocks, Joy wants to give you a quick overview of the small-cap market, specifically the Russell 2000 Index. A recent note from Bank of America warned to be cautious about investing in this group, even after its recent pullback. Analysts pointed out that while prices might seem cheaper, the index's PE ratio is still 2% above its historical average. What's more, the quality of companies in this index is declining, with higher debt and more volatile earnings. On the flip side, analysts still see long-term potential, citing factors like reshoring and the U.S. investment cycle. So, for investors interested in this group, it's crucial to do thorough research and consider all factors before making a decision. How did you like today's segment? I hope it was helpful. you can see that the stock market has both opportunities and risks. The most important thing for investors is to stay informed and do your homework before making any decisions. All the news and analysis I've shared today came from investing.com. Now let's talk about the stock prices of the companies we just discussed. In this next part, I'll be giving you a live, daily update on their price analysis. Let's start with our first hot stock, AST Space Mobile, ASTS. It's up by a whopping 13%. Looking at the price chart, you can see this stock is in a very clear uptrend, hitting new highs. This is a great sign for long-term investors in new technologies. AST Space Mobile's long-term value is highly promising as it aims to provide high-speed satellite internet to smartphones, a huge market with few players. If the company succeeds with its Bluebird satellite launch plan, we could see exponential growth. But not every stock is on an upward trend. We also need to be cautious about risky stocks like CRWV, CRWV. The stock dropped by 6% after its Q2 earnings report. Looking at the chart, after a strong run-up, the price is starting to consolidate and show a worrying pattern. The larger-than-expected loss raises questions about the company's short-term profitability. Even with good revenue, high expenses are a key issue for investors to follow closely. Let's move on to our familiar coffee giant, Starbucks, SBUX. Baird analysts have upgraded their recommendation to buy, showing strong confidence in the company's new recovery strategy. From the chart, you can see Starbucks stock is building a solid base after a period of decline. The price is currently moving within a triangle pattern, which signals it's waiting for a clear direction. For long-term investors, the company's new strategies and analyst recommendations are positive signs. Another interesting stock is in the airline sector, United Airlines, UAL. S&P Global Ratings just upgraded its credit rating, reflecting the airline's strong performance and stable cash flow. Looking at the chart, United Airlines stock is in a clear uptrend channel. The key support level is at the bottom of this channel, which could be a good entry point for investors. The key resistance level is at the top, a good point for taking profits. With its revenue from premium services and high-margin international routes, the airline has good long-term growth potential. Finally, I have to talk about the buzzy Micron Technology, MU. Analysts at JP Morgan have given it an overweight rating and raised their price target. The reason is that the company's earnings beat expectations, driven by the increasing price of DRAM chips used in AI and data centers, which is boosting its profits. On the chart, Micron is in a strong uptrend. With the demand for AI-related technology, the company's long-term business value looks very promising. Any investor interested in AI tech stocks should not miss this one. Beyond individual stocks, Joy wants to talk about the market as a whole, starting with the Nasdaq Composite Index. As you can see on the chart, this index has a very clear long-term growth trend. Especially in recent years, the Nasdaq Composite has consistently hit new record highs, which reflects the strong growth of technology and innovation stocks. The long-term outlook for the Nasdaq Composite remains bullish as long as new technologies continue to drive the global economy. And what about the Russell 2000 index, which includes small-cap stocks? The chart shows this index is also moving within a strong long-term uptrend channel. However, it's recently pulled back slightly. Bank of America analysts have warned to be cautious, as even though prices might seem cheaper, the PE ratio is still 2% above its historical average, and the quality of companies in this group has declined. But on a long-term view, there's still a positive outlook. So investors in this group should do their research and consider all factors carefully before making a decision. So what do you think about today's deep dive? I hope it was helpful. It's clear that investing isn't just about good or bad news, but about looking at the big picture, long-term business value, and price trends on the chart. And that's just my personal take, not investment advice, okay? Always do your homework, double-check your info, and remember, every investment comes with some risk. Before we say goodbye today, don't forget to like, share, and tap that notification bell on Joy Up Invest so you'll never miss our daily dose of juicy market stories from around the world. So what about you? Which stocks are you holding right now? Drop it in the comments. I'd love to hear from you. Catch you in the next episode. Bye!